Well, there has been a meltdown in the price of oil, and it continues to be a concern over the weak demand and overcapacity. You have Brent crude, which is the crude benchmark on oil prices worldwide, falling more than 16%, and it is the lowest level in 20 years. Oil markets are concerned over the lack of storage given the low demand amid the slowdown in the world economy due to the COVID-19 pandemic. For his analysis of the situation, let's cross over now to John Driscoll, Chief Strategist of JT Energy Services, and he joins us now from Singapore. John, how serious is this historic collapse in oil prices?
I think it's unprecedented. It's something that the oil markets have never seen. It's the severe impact of not only the COVID-19 virus and a drop, a demand destruction, but it comes at a time when you have this dispute between the Saudis and Russia, this oil war that's unleashed additional supplies onto the market. Now, the main casualty so far has been the U.S. crude WTI, which traded at a negative $40 a barrel on Monday. With Brent, that has not gone negative. Brent is a major benchmark grade. It loads from the North Sea, from several ports in the North Sea there. It's a waterborne crude, but the WTI, because it's limited by pipelines, storage, the price collapsed. We've never seen negative prices before, Rico. It's unprecedented.
No. Indeed, it is unprecedented and historical. But, John, a slump in oil prices is normally a cause for celebration in gas consumer countries like here in the Philippines. So is the lower price a blessing to drivers and factories?
Well, the lower energy prices, Asia, as you correctly note, is a net importer, net consumer. So it does have a beneficial effect, but it's coming at a time when economies are collapsing. When you've got cancellations of airline flights, energy consumption is dropping, individuals are living in quarantine, jobs are getting lost. We're in the throes of a recession and possibly a depression. In that kind of environment, I don't think low oil prices are such great news.
It is not great news, but of course, everyone believes that with lower oil prices, this could also help the economic recovery down the road. So with prices now plummeting between $10 to $16 per barrel, and of course, you have not enough storage for oil. That's why we also seen this fall in crude prices. Will oil companies, John, at some point give the oil for free?
Well, I don't think we're going to see that just yet. I mean, remember that oil companies, refiners are in the business of buying crude oil, processing it, making products and marketing that at the pump, and they incur costs. Right now, crude oil did briefly dip into a negative territory when the WTI contract closed on Monday, but we're going to see pressure on the price. Those high-cost producers in the U.S., in the deep water areas, the offshore frontiers, they're going to be forced to shut in. If there's no place to put the oil, the only alternative is to cut back supplies. That also applies to refineries. They're already in the course of cutting back their output severely because they're running out of places to store. So I would not hold my breath waiting for a Christmas present in terms of oil deliveries. This was a one-off situation. It was brought on by the severe crunch on the expiration. Now we could go there again if we fail to find outlets. If demand stays very weak, we could revisit negative prices, when the contracts settle later on in the month of May. But Monday was a bloodbath. The oil industry has never seen anything like negative prices.
So we can expect prices to remain low for quite some time during this coronavirus pandemic. John Driscoll, an oil analyst based in Singapore, thank you so much for your insights.